Hey, what's going on? John here. Got another little quick video for you here on the investor series. I've been paying a lot of attention to my boy Tom Lee. Basically what I've kind of found is it's a little few and far between. I mean, I love listening to Jim Cramer, what he says, but it's almost like Jim Cramer is like talking like 20 times a day. But I don't hear as much from Tom Lee. And I think I'm going to give him a little nickname. He is like the raging bull of Wall Street right now. So basically, Tom is saying that here we are, the time of this recording, it is Thursday, February, what is the date? February 11th, and the markets have just been on a tear in this new year. And it is just scary for a lot of people that are bubble predictors. They're getting pretty scared about how the bubble territory of the market right now. But not Tom. Not Tom, no, not Tom. He's saying that investors are being too scared. And anyway, so let's go take a look at it. And again, the way that this is kind of the second half of the clip. The first half was actually was Jim Cramer, and then the second half is here Tom Lee. So check it out.
On the other hand, FundStrat's Tom Lee says investors are too cautious, and that has him keeping his bullish suit on. Let's bring him in, CNBC contributor Tom Lee, for more. You heard what Jim Cramer just said. He sees signs of froth that won't last. What do you say?
Well, I agree with him. I think there is signs of froth in the market in 2021, and some of the areas Michael Santoli mentioned. But these are, there were signs of froth every year since 2009. So I think one of the things we have to be mindful of is how pervasive that level of speculation is. It doesn't seem that high in our Zooms.
So it doesn't seem worse to you now than it did years ago?
I don't think this is. I think this is at a far lower level than even the biotech craze that was in that 2016 period.
What makes you say that?
Well, for instance, look at retail investor cash. They pulled out about 110 billion out of stocks at the start of this year. Mutual fund and equity ETF flows have been negative. It's been averaging 7 billion a week, which means people are not buying stocks or taking money out of stocks. And then if you look at like measures of our institutional client sort of sentiment, it's not that bullish. And then we know hedge funds degrossed dramatically. In fact, it was almost a massacre in terms of hedge fund performance. They haven't put that capital back into the market. So I think more money's been leaking out of the stock market than coming in. And that doesn't, to me, seem like a formula for a frothy top. It's more of as Michael said, it's an air pocket that's being created here, which might be quite healthy.
But is it true or is it not true? Correct me if I've got the facts wrong, but specifically with respect to the retail investors, the trend of money moving out of stocks and into fixed income has been the case for quite a few years, with some periodic exceptions, right? They've missed out on
Tyler,
a lot of it.
Yeah, I mean, there's, the retail investor is multiple cohorts, because I think older Americans, like baby boomers plus, have been allocating to bonds. But this sort of shift into bonds is a 10-year story. I mean, in the last 10 years, $3 trillion of household savings flow has been created. 94% went to bonds. You look at any other 10-year period, unprecedented. Most of the time, it should be 50% or more into equities. So stocks have had no real net inflows. And now we start to see retail investors getting interested in equities in 2020. And just because they're starting to buy stocks, I don't know why we should say this is the top. I mean, this could be the first year out of 10 years where there's real inflows.
So if I sum it up in a quick, overly glib phrase, froth, yes, you see it. Danger zone, no, you don't.
Yes, I mean, if there was 30% of the stock market in insane territory, and they were going up, gapping up 10% a day, then that's pretty scary. But the aggregate market cap of everything that looks frothy is a tiny, tiny percentage of the stock market.
Shepard's.
So there you go. So, Tom, one thing about Tom, which is I enjoy is Tom. So first off, I think I spotted Tom at some point in the kind of the mid to end of 2018, and he was really spot on with his 2019 prediction of equities. So much so that I was really taken certainly taken aback by what he said and really his bullishness, right? Same thing with 2020. Now he had a pretty bullish prediction about 2020 pre-pandemic, and then I didn't really follow him too much when the downturn happened in March, but he was pretty much spot on all through 2020 after the pandemic. But I definitely like how he really breaks down and looks at the mechanics of the way the inflows are working, and I don't really feel like I'm seeing many other folks, out there, whether they're a CNBC contributor or somebody else that's out there that's really kind of examining the way that inflows go, into equities versus bonds or what's happened up until 2009, which is really the start of the bull market or this current bull market. But I do enjoy that aspect of it because a lot of people I feel are not looking at certainly the rise of the retail investor, the amount of inflows that are coming in, and examining, of those inflows, how much are going to bonds and versus stocks. So I certainly like his take. I've got a couple other videos on Tom in there, so check them out in my, on my channel here. I'll drop them on the info tab so you can see my other videos that I have there on Tom when he talks about Bitcoin. He's got some really aggressive targets on Bitcoin, right? He just he doesn't really have a price actually, but he just says that how much percentage he thinks is going to go up 300% in 2021 compared to I guess 2020, right? So there you go, guys. There's Tom Lee. I'm going to find him. I'm going to go check out those clips. I'm going to find those clips of Tom Lee, and I'm going to put them on here because I enjoy what he has to say and how he likes to take a look at all the fundamentals there. Hey everybody, check it out. I got a new blueprint I came out with. I cover investing, I cover online income, I cover credit, business credit, financial independence, and then also at the end I got this kind of a long guide. It's like 10 to plus pages, maybe even 15 pages actually. All the groups in the US give you a free credit score and also a free FICO score, and it's only $7, everybody. I still got the online income stuff. You can get the online income programs I have from the credit blueprint that I have. And I'm doing a lot more online income things, not just the Profile Profit Machine, but you can also click the link below with the Profile Profit Machine where you can, kind of like basically make extra money or generate leads or profits from your social media profiles. All right, have a good one. Good luck investing.